Well, hello and welcome to this week's update here on YouTube. Thank you so much for joining me. So, we've got a new opening range. Write these numbers down: 4212. Anything above that on the SPX, and we're in bullish opening range mode. Anything below 4180, and we're in bearish opening range mode. Okay, so we've got to wait until Monday at least to see which way the market is likely to move. Remember, this is 92% accurate. So we do put a lot of weighting on this, but we don't just look at this by itself. There's another 10 different market internals that we look at as well. But as far as the opening range goes, which is one of our indicators, we need to wait, obviously, having reset it on Friday, the third Friday of the month. Monthly options expiry. We will wait for next week to see which way the markets are going to move. But having said that, we are up against resistance here, and probably better to look at this chart. Let me just switch it here. So you can see this was a trend line where the market was moving up. Then what we did is we broke that to the downside. We formed a double bottom, a little bit of a bull flag, broke to the upside here, and now we're up against this trend line, which is now resistance. We actually have quite a few pivots through here, which are acting as resistance as well, right? So we're up against resistance. And this is something, and we've got a new opening range, so we need to be mindful of that. The other thing is the Nasdaq has really been propelling the market up just in the last few days, and we can see that that too is up against resistance and overbought with an RSI there of 70. Doesn't mean it can't continue to go up, but it is something to be aware of, right? That we are up against resistance or a resistance zone, and we are somewhat overbought, right? So we'll make sure we keep a close eye on that. But if you have a look at the overall market in a snapshot, you can see the economically sensitive Russell 2000 not really doing a whole lot. The S&P 500 sort of just traveling sideways, a bit like the industrials, and the transports are down a little bit. But when you look at the Nasdaq, that's been the star and certainly been moving higher. And that's where we've had some of our positions this week, or should I say put new positions on last week, and they've done obviously very, very, very well, right? And we'll have a look at a couple of those positions in a moment. As far as economic news goes, we've got PMI manufacturing coming up, dissecting the meeting minutes from the Federal Reserve, their last meeting minutes. I'll dissect those carefully. The prelim GDP quarter over quarter, unemployment claims again, obviously, core PCE price index month over month. So there's a couple of things there that could certainly move the market, but they'll be very much looking at the Federal Reserve meeting minutes and looking with their comments on inflation and obviously interest rates. So keep an eye on that, and we've got a new opening range, right? So this is a good week to be sitting on the sidelines, waiting for a new opening range, and let's see the reaction to the meeting minutes. But we still don't just sit on the sidelines all the time because there's economic news. There's economic news all the time. We need to be able to still make money, and that's certainly what we did this week. Now, one of the trades we had on was BSX, Boston Scientific. With 29% return or winning trade here. We bought it for $3.10. It's now worth $4. We're just going to go ahead and close that trade out now, just for some of the reasons I said. New opening range up against resistance. Could see a bit of a pullback coming. It's probably a good idea to take that winning trade, and that's what we're going to do. We've got a Microsoft call spread on right now. That's 25% in profit, 25% return right now. We base this on, just so you guys can get up to date with the positions we've got, we base this on a bull flag that we had, right? So we've got a bull flag here, as you can see here. The projection on that, and obviously some igniting volume down here as well. We projected that would move to 326. Right? I've had a couple of days to the upside, 4, and then just a neutral day on Friday. So we're sitting at 318 right now. 326 is the target. We've got a 25% return on our call spread. We're holding that for now. The other position that I spoke about last week was Palantir. Have a look at Palantir. Let's have a look at Palantir. Palantir. Boom. Look at that. Boom, boom. Two huge moves to the upside. Just an incredible trade. Now, the issue right now is that it is up against this resistance zone right here. And it's very overbought, right? The RSI of 84. So, you look back here with an RSI of around 80. Once it got to that level, overbought, it did have a pretty big pullback. Okay, we've got an RSI here of over 80. Had another move and then a big pullback. So you don't know, right? We could get more of a move here, but for me, making a 54% return in 5 days, probably not a bad idea to close the trade out, right? The market's paid you money. It's giving you a gift. So we bought the 7-strike call for $373. It's now worth $573, right? So 10 contracts, $3,730. They're now worth $5,700. Made $2,000 in income in 5 days, right? If you had one contract, you've made $200 from a $373 risk. Pretty good deal. So a 54% return in 5 days, up against resistance, overbought. Close the trade out now. I still like it long term. I still like Palantir long term. Close it out now. Realize the profit, right? Lock it in the bank where it's safest. Let the stock have a pullback, and then we can re-enter with a long-term view. I think that's probably the smartest way to do it. So an outstanding trade like I showed you guys last week. Now, another trade that we had on was Google, where we set up a synthetic long position where we bought the 120, sold the 120, bought the 120 call, sold the 120 put. That cost us $300. The value right now is $838. So we've made 179% return on our risk in 5 days. Pretty good deal. 179% on our money. Now, our view on this is long term. I still like Google long term. Long term, our target was 151 and probably beyond over the next, 14 months or so. But right now, having such a big move like this, RSI of 82, almost 83, up against resistance. You can see quite a few pivots here. Friday, we had a bit of a bearish candle where the buyers drove it up to this resistance zone and then failed and then came back to sort of finish flat for the day. Doesn't mean that we couldn't continue to move up, but when you make 179% return on your risk in 5 days, that's not a bad idea to close the trade out, realize the profit, let it have the pullback, and then re-enter our long-term position. So I think that's what we're going to do there. So another outstanding trade. Winner, winner, winner. Just incredible, right? Incredible trading. So an idea for this week is this one here, STZ. So we're seeing here a bit of an overall bull flag here, breaking up. If we have a look here, it's just recently gone above the 200-day moving average. Now, because we are up against resistance, because we are somewhat overbought at the moment, what I would probably say with this one is use the 200-day moving average as your line in the sand, your risk level. If it does close below, not an intraday move, but a daily close below the 200, then I would simply exit this trade. I'm not going to take a lot of risk on the trade anyway, but I like the fact now that it's broken above the 200, and it also has a very nice daily squeeze, right, where the Bollinger Bands are inside the Keltner channels. Now they've broken out, as you can see here and here. 12-period momentum pointing up and above 100. Great setup, classic setup there. I like this one to the upside. Right, so potentially up to around 260. Not next week, not the week after, but over the next couple of months that could potentially happen. And I like the look of this one. It's also got a monthly squeeze that's setting up. Hasn't fired yet, but setting up as well. So that is interesting. Hasn't been above the 200-day moving average since last year, right? When it broke below, formed a bear flag, and then fell substantially. So this one could be an idea. What I would do is be very conservative though. I'm going to sell the 250 call, buy the 245 call for the 21st of July, 62 days from now. It's only going to cost $175. I put my stop in at 75 cents, risk $100 to potentially make and put my profit taker at 475, right? So it's a 3-to-1 asymmetrical trade with the risk skewed in our favor, right? The reward is 3 times higher than the risk. So I like the look of this one. I'm not going to take a lot of risk this week. I'm going to wait for a new opening range, but that's a 3-to-1 asymmetrical reward to risk that we're setting up for this week. Closing out Palantir and Google for exceptional profits, and Boston Scientific, just exceptional trading. I hope you guys enjoyed that from last week. Hope you made some great money, and we'll look to re-enter those long-term positions after we do see a pull back. All right, my friends, thank you so much for listening. All the best, and bye for now.